And returning to our headline story in business, Tesla's lower sales growth outlook. We're joined by Rolf Bulk. He's equity research analyst at New Street Research. He's speaking to us from Singapore. Thanks for joining us, Mr. Bulk. Now, gross margins in the fourth quarter taking a hit for Tesla. Not surprising, revenue down for all sorts of reasons, including weaker demand, higher interest rates, and meanwhile, costs going up again for different reasons. Now, the launch, production and sale of the new car to be made by the second half of 2025, how would that change this calculus?
Yes, thank you for the question and thank you for having me. Indeed, Tesla is expecting a slowdown in 2024 and it's important to keep in mind that this comes off a year, 2023, in which they grew nearly 40% to 1.8 million cars delivered. But Tesla, like all of the car companies, is not immune to macro weakness, to the high interest rates. They are affected by this. So this is impacting demand in the near term. Now, in 2025, they are expected to launch a new car. So far, it's nicknamed the next-gen car, or the Model 2. And in our view, Tesla is the only Western OEM that is positioned to deliver a compelling mass market EV. And there's two very important elements there to keep in mind. We would expect that car to retain everything that makes Tesla unique. So we expect Tesla to prioritize autopilot, full self-driving, the screen experience, strong performance, good range. And secondly, that car will increase Tesla's addressable market from around 20% today to closer to 80% of the overall car market. The total cost of ownership of EVs is very compelling. So even with an ASP, an average selling price in the $25,000 to $30,000 range, that car would be very affordable for many people.
Mr. Bulk, sorry to cut in here.
That can lead to the next...
pardon me, that we're looking at a discount of about 36 to 37%, this new car, even when it launches. Meanwhile, you're talking about Tesla having advantages that possibly Ford and GM, other EV makers, do not share. Very quickly, what might those be?
Yes. So Tesla is a company that has designed its EV from the ground up, very similar to some of the Chinese companies. So they are very well positioned to continue to innovate on those platforms, which have been designed purely as EVs rather than transitioned from ICEs to EVs. On top of that, the balance sheet is very strong. Tesla barely has any debt, and in today's high interest rate environment, that is an advantage when you need to put a lot of money into those new factories to build out that production capacity.
Well, Tesla may compete with Ford and GM. I think you've mentioned Ford and GM would find it very hard to compete in a Western market, but impossible in the Chinese market. Of course, Elon Musk coming out to say that Chinese companies without trade barriers would demolish other car companies. Tesla and BYD, what's your assessment?
Yeah, it's likely a fair point. The Chinese market is extremely competitive, both in terms of the price of the vehicles and in terms of the sheer number of competitors. And most of those competitors are young companies such as BYD, such as NIO, and also Tesla. So for incumbents, Western incumbents, to enter that market, that has proved to be almost impossible indeed.
Oh, thanks so much for joining us, Mr. Rolf Bulk, live from Singapore. Thank you.